In today's interest rate markets, let's take a look at the 10-year note futures today as they're realizing some selling pressure here. And with today's price action, we are actually seeing the September future now trading at the lowest level in 8 sessions, almost a 2-week low, breaking back below the 132 handle, 131.19 currently on that September future. And I think when you look at some of the factors, well, the primary factor, I believe, in today's price action was the data release this morning, where we did see the ADP private payroll number coming out ahead of tomorrow's non-farm payrolls, stronger than expected, quite a bit stronger actually. So that maybe changed or shifted the expectations for the number tomorrow. Couple that with unit labor cost increasing much more than what was anticipated as well. So again, I think in some people's mind that would tend to be a potential inflationary type of event. And if those trends continue to see wages increasing at this type of pace, then that there's some concerns as far as what that might mean from an inflation standpoint moving forward at some point. So I think those are two of the factors here that are really influencing the shifting of expectations. And I want to point out now, when you look at today's yield curve, it is a little bit of an interesting dynamic. We are seeing the 10-year right around 162.5 basis points, which is a little bit higher, but when you look at it from a range of the last month or month and a half, pretty much in the middle of the range. But what's interesting about today is it's the middle of the curve that you're seeing selling off more so than the back end of the curve. And what I mean by that, the 5 years futures, the 7-year futures markets, and the 10-year futures markets are selling off a little bit harder than the 20s and the 30s. When you look at the yields, we're seeing, again, the basis point shifting more so within those 5s, 7s, and 10s, and not quite so much on the back end of the curve. So a little bit of adjustment there as well in the yield curve as we do go into that non-farm payrolls number tomorrow morning.